Welcome to another episode of Washington in Focus. I'm your host, Tim Clouser, with the Center Square's Washington State investigative reporter, TJ Martinell, here to talk about the state income tax again, which is fresh off the governor's desk. But not just that, but all the people that could be potentially leaving the state because of this new tax. TJ, you spoke with a realty group that operates in and out of Washington State. Why don't you tell us a little bit about what they told you?
Well, pretty much, I mean, the reality is that the market doesn't lie and realtors go where the demand is. And so what we're seeing is this basically a movement of people who've got wealth or high income leaving Washington State, maybe not for good, but they're leaving in terms of their residencies. So they're going to places like Las Vegas, to Florida, to Tennessee, to Idaho. But with this realty group that I spoke to, they've created an entire campaign for highlighting Las Vegas for people from Washington State. And it's not just because of this reason, but one of the things that they use to attract people to buy these. And when say like who their clients are, we're talking about people who can afford $20 million homes. So this is not just random, somebody who's buying a little starter home rambler. We're talking about somebody who has enough capital to spend $20 million on a home. And the whole campaign is that they have no income tax down there. So, and so it's not just them doing these campaigns. They're not doing these campaigns just for political purposes but I think it needs to be understood. They're doing these things because that's where the demand is. These are business people. They're making business decisions. And we look at the data, and the data that I just got the other day from a real estate organization that tracks this kind of stuff. The number of listings, pending sales, and actual sales has increased dramatically for homes that are worth $5 million or more during so far this year compared to last year. Sales for $5 million or more in King County are up 66% compared to the same time frame from last year. So we're seeing a lot of people selling their homes, and this isn't so much a reflection of what's happening to the market. It's not about the value changing of real estate property. It's about the fact that people who have the money that is going to be taxed by this income tax or by the real estate, not real estate, the estate tax, they're moving their wealth and they're moving their residency out of the state so that they're not subject to these taxes that are then going to have a lot less revenue coming in than they anticipated. And so there's implications for how it's going to affect other Washington residents who are currently not subject to the tax because of the exemption in the bill.
Mhm. And Governor Ferguson, the majority party Democrats in Washington State, throughout the 2026 legislative session, they kept making this claim that capital flight wasn't to be worried about. Maybe it would be there to a certain degree, but it wouldn't be substantial. When the topic of the Seattle Supersonics and NBA team potentially returning to Seattle was brought up, this concern was also raised, and the governor again said, look, the majority of the nation, all these other states have income taxes, and it's not pushing away these opportunities. I mean, from what you're seeing and what these realtors are seeing, could these few very wealthy, affluent people have an impact on the state's economy?
Yeah, so I think that the issue is that they're not going to get as much revenue as they anticipated, and so they're going to use that to justify lowering the threshold so that more and more people have to pay the income tax because this was pitched as a millionaire's tax, and let's put aside the constitutional arguments and legal arguments for why it's you know not lawful.
Mhm.
People are like, well, it doesn't apply to me. Well, okay, there's two things. The people who could pay the tax move because they got the money to do it. So they don't end up paying the tax. If they're employers, they could take their jobs with them, which means people who could afford to live here because of their job now have to move and sell their place. And then you've got people where the tax suddenly applies to them because they're not getting the revenue they want.
Uh, just for a refresher for those listening, I mean, this new income tax, it's a 9.9% tax on annual income above $1 million. So they exempt that first $1 million, but say you're making $1.1 million, you got to pay about 10% on that extra $100,000. Or if you're making $20 million, you're going to be spending or paying that tax on the other 19 million. But if they were to drop this threshold, and Democrats were very cautious this recent session as to whether or not they will return to the income tax next year or in the years later to reduce that threshold. But you're speaking to very wealthy people having the resources to relocate out of the state to avoid this tax, even if they're not leaving the state altogether. But what about the people that can't avoid this? Should they lower the threshold? Do we expect to see home sales skyrocketing even for the lower and middle class, or is it kind of just something that they're not going to be able to avoid?
I mean, there's a lot of different things that could come out of this. You could have the tech sector basically pack up and leave. I mean, how many layoffs have occurred with the tech sector recently? And the tech sector, for people who really don't know or don't follow our economy or our state budget, that's pretty much how the state's been able to get away with its spending increases over the years, because it's really been driving our economic growth. And so if the tech sector goes down or something happens to it, not only are the jobs lost, they got to sell their homes, they got to move, whatever, and they're not paying the tax. So now you've got that going on. And then when these people lose their jobs, they're going to be looking at places to go. They're not going to stay in a state that has an income tax, a capital gains tax, and doesn't have the weather of California, and there is talent here, but it's it's creating what many people would consider to be disincentives to continue staying. But more importantly, it's a disincentive for people who are not in Washington State to come here in the first place.
And people might hear tech sector and think, that that's really broad. Who does that really mean? And I think just putting a few faces to that can really show the extent that this, or the impact that this tax might have. I mean, we saw even prior to its passage when it was being rumored about and the capital gains tax was increased. We saw Amazon's Jeff Bezos leave Seattle. We've recently heard the CEO of Starbucks wanting to leave Washington and heading to Tennessee. We've heard pro-tax advocates such as Nick Hanauer moving to other states. It's interesting to see all these people leaving the state, and with them, these industries go, or at least to some extent, and the trickle down effect that that could have on the economy in years to come. I mean, we're just starting to see this start now. I mean, what's to say the impact could be 10 years from now? I mean, 10 years ago today, the state budget was about half the size of it is now. I mean, are we going to reach a breaking point, or are they just going to find a new way to increase spending, whether that be reducing the threshold on this income tax or other measures?
I mean, what we could very likely see in 2027, 2028 is legislative sessions. If there's any kind of recession and they're facing a 10 billion, 12, $15 billion shortfall, we're going to see some it's going to be it won't be boring, I'll put it that way, because you're going to have people who just will not cut spending no matter what. They're you're going to see lawmakers that will just want more and more taxes and just double down. So then there's going to be people who are going to say we don't have the money, it's not going to come in. It's going to be interesting to see policymakers who have ideological agendas go confront people who are economists and who deal with just math. And where, suddenly 2 + 2 = 4 is a political statement where you just say that these numbers don't add up. And so that's what I could see definitely happening. And it's not just the income tax, but that what we're seeing is people are taking their money outside the state, so it can't be taxed by Washington, and obviously won't be used as tax revenue. And we've seen this with Jeff Bezos, like you mentioned, or Howard Schultz or whatever, where they're moving to other states and they're making financial decisions at the time that would have cost them if they'd stayed in Washington State. And so Washington State didn't get that revenue anyways.
And for those who are skeptical that the state will increase spending with limited means or uh, thinning means, just this year they closed a $2 billion deficit, largely with reserves. last year or the 2 years ago, they faced a 12 to $16 billion deficit that they filled with the largest tax hike in state history that uh, they somewhat reverted in this most recent session due to its impact on low and middle class families. But uh, it- definitely interesting to see, something we'll keep our eyes on. Very surprised to see these realtor campaigns popping up in these tax havens trying to attract Washington residents. But TJ, appreciate you covering this. And for anyone hoping to read that story, you can catch it at thecentersquare.com. Otherwise, thank you for joining us for another episode of Washington in Focus.